Demand is really strong and it's diverse. It's coming from all over the place.
And while most people focused on the numbers, Jensen buried something much bigger inside that interview. 3 predictions for 2026 that almost nobody is talking about.
At the core of it, Becky, what's happening is that AI just went through its third inflection.
There are 3 of them. Each one is bigger than the last. And if you hold any artificial intelligence stocks, or you're thinking about buying them, you need to hear all 3 before this video is over. Let's start with what actually happened. Nvidia just reported 4th quarter earnings, and the results were almost hard to believe. Revenue in its core data center business, the division that sells the chips powering artificial intelligence, grew by 75%, not $75, 75% in a single quarter. That division now controls roughly 95% of the entire market for artificial intelligence chips, and Nvidia's profit margins sit at 75%. To put that in perspective, for every $100 Nvidia brings in, $75 is pure profit. That's not a tech company, that's a money printing machine. But here's the thing, the earnings were impressive. They were expected to be impressive. What wasn't expected, what most anchors and analysts completely glossed over, was what Jensen said next. Because buried inside that interview was a framework for understanding exactly where artificial intelligence is headed in 2026, and it starts with something he called the third inflection.
The first one was 2 years ago with ChatGPT. And then the second one was about a year ago when the reasoning AI agents came out.
Think of an inflection point like a gear shift. The car is already moving, but suddenly it jumps to a completely different speed. Jensen is saying artificial intelligence has done that 3 times now in just 2 years. And most people only notice the first one. The first shift was ChatGPT. That was the moment the world woke up to artificial intelligence. Suddenly anyone could have a conversation with a machine and get a useful answer back. It felt like magic. Millions of people started using it overnight. Companies started panicking about being left behind, and the demand for chips to power those conversations exploded at a speed the industry had never seen before. The second shift happened about a year later. That's when reasoning models arrived. These weren't just chatbots giving you quick answers. These were systems that could actually think through a problem step by step, like the difference between asking someone a question and getting an instant reply, versus asking them to sit down, think it through, and come back with a real analysis. Reasoning takes dramatically more computing power than a simple conversation, and that meant the demand for Nvidia's chips jumped again, significantly higher than what ChatGPT had already created. But Jensen says we're now inside the third shift, and this one is fundamentally different from both of the others, because the first 2 inflections were about artificial intelligence getting better at answering questions. This third one is about artificial intelligence actually doing things.
And then now, with these agentic systems, we're now having these agents able to reason, take tasks, and actually do work.
This is the part that should stop you in your tracks. An artificial intelligence agent doesn't wait for you to type a question. You give it a goal, and it figures out the steps, makes the decisions, and completes the task entirely on its own. Think of it like the difference between a calculator and an employee. A calculator answers when you ask. An employee shows up, understands what needs to get done, and handles it without being told every single step along the way. That's the shift happening right now. And Jensen is saying it's already spreading across industries faster than most people realize. Software development, scientific research, drug discovery, autonomous vehicles. These agentic systems are beginning to show up everywhere at once, and every single one of them needs massive computing power to run continuously in the background, which means demand for Nvidia's chips isn't plateauing. Jensen is saying it's about to accelerate again, for the 3rd time in 2 years.
Incredibly well all over the world. Of course, you've heard how Claude Code and OpenAI's Codex are doing incredibly well in companies all over the world.
And that phrase, off the charts, isn't marketing language, it's a signal. Because every time computing demand has jumped in the past 2 years, Nvidia's revenue has followed. Jensen has called each of these shifts correctly, ahead of the market, every single time. So when he says the third one is already underway, that's not a prediction anymore. That's a statement about what's happening right now, today, inside the data centers of the world's biggest companies.
You know, most people see AI as a chatbot. And it's understandable because OpenAI is so popular and they're doing so well. And we hear a lot about Cloud Code. But remember, AI is about a new way of doing software and affects every single industry.
This is Jensen's second giant prediction, and it's the one most investors are underestimating. The assumption in the market right now is that artificial intelligence is a story about a handful of massive technology companies, the big cloud providers, the hyperscalers, Microsoft, Google, Amazon. And yes, those companies do make up roughly half of Nvidia's data center revenue. But Jensen says the other half is where the real growth is coming from. Small cloud providers in regional markets around the world, pharmaceutical companies using artificial intelligence to run drug discovery, car manufacturers building autonomous vehicle systems, enterprise companies of every size beginning to build their own artificial intelligence infrastructure. Jensen called it broad-based, and that word matters enormously because it means this demand isn't dependent on just a few customers anymore. If one hyperscaler pulls back on spending, the rest of the market fills the gap. That changes the risk profile of the entire artificial intelligence trade. It makes Nvidia's revenue base more resilient than at any point in the company's history. Think about what that actually means for a moment. A company that already dominates 95% of its market is simultaneously expanding that market into entirely new industries. That's not just growth, that's compounding growth. And Jensen is saying 2026 is the year it really starts to show up at scale. But here's where things get complicated, because while Jensen's customer base is expanding, so are his competitors, and some of them are coming from places nobody expected.
You did hear earlier this week about AMD cutting a deal with Meta.
Advanced Micro Devices just signed a multi-year deal with Meta to supply artificial intelligence chips. That's not a small win for a competitor. That's one of the biggest technology companies in the world deciding it doesn't want to depend entirely on Nvidia. And Advanced Micro Devices isn't alone. Google has been quietly developing its own custom chips for years. Amazon has its own silicon division. Even some of Nvidia's most loyal customers are hedging their bets. Because when you control 95% of a market and charge 75% margins, every other company in the world has a powerful financial incentive to find a way around you. The math is simple. If they can reduce their dependency on Nvidia by even 20%, they save billions of dollars a year. Jensen knows this better than anyone. He's been watching competitors try to chip away at his lead for years, and every single time Nvidia has responded the same way, not by cutting prices, not by defending its position, but by running faster. Which brings us to the third prediction, and the most important one for anyone watching Nvidia's stock right now.
We'll have Nvidia kind of running as fast as they can. The new chips that are going to be rolled out.
The answer to every competitive threat Nvidia faces has the same name, Vera Rubin. That's the next generation of Nvidia chips, and they're scheduled to launch in the second half of 2026. Jensen's strategy has always been the same. By the time a competitor catches up to where Nvidia is today, Nvidia is already 2 full generations ahead. Vera Rubin is that next leap. It's not just a faster chip. It's a new architecture designed specifically for the agentic era, for the systems that don't just answer questions, but actually go out and do work autonomously. If Jensen's timeline holds, and Nvidia has consistently delivered on its product roadmap, Vera Rubin could land exactly as the agentic artificial intelligence wave hits its peak adoption phase. That's not a coincidence. That's a calculated move by a company that has spent years making sure it's always the only option available when demand surges. So here's what all of this means if you're an investor. Jensen just told you 3 things in that one interview. Artificial intelligence demand is entering a third phase. Agentic systems that act, not just think, and the computing demand that comes with them is already off the charts. The customer base is no longer just a few giant cloud companies. It's spreading across every industry on Earth, making Nvidia's revenue more resilient than ever before. And Nvidia's answer to every competitive threat arriving in 2026 is already built, already named, and already on the way.